think exactly that. I mean, the labor market is certainly slowing, but it's not slow. And you're seeing some mixed signals. The directional trend obviously is getting weaker. For example, will be today somewhere. I mean, the range. What is notable? The range is quite wide. Prediction by economists from 70,000 to 220. As you said, consensus is around 140, 150. If it comes in somewhere around there, I think the markets will be pretty subdued. But if it's at either of those major extremes, then I think you will see some action in the market.
We obviously know the Fed is very much data dependent, very data reactive, but we also know that it is on course for 2 more 25 basis point cuts for the rest of the year. Let's say we get an outlier in any of the numbers of the next 2 months or so. How is the market actually going to react to that? How robust is the market going into the all-important jobs numbers of the next few weeks?
Well, I think you should also understand that next Tuesday, you'll get the FOMC meeting minutes. That'll be another indicator. And then we'll get one more jobs print before the November 7th, Fed meeting, which I would expect in consensus is 25 basis points cut. But if you get a huge outlier, to answer your question directly, let's say the print is 220 at the high end, then I think you will see the market really have some difficulty and choppy waters.
Neal, as you mentioned the elections, what typically happens to hiring ahead of an election? Is there a lot of postponement in terms of some of the hiring? Does it freeze? Does it continue as normal? What do you typically see?
Well, first of all, we're entering into a kind of a seasonal period where hiring does pick up a bit, and that kind of counters the election a bit. But before an election, especially one like this, you're going to see people kind of staying put. I do think the only thing we know about this election, because it is nip and tuck, it is extremely close. It's going to come down to roughly 7 battleground states. But it's the fact that that in the election period, that people, the Senate will definitely go to the Republicans. And so or not definitely, but most likely, that's certainly the high probability. So if you have a Kamala Harris administration, there'll be a kind of a check and balance. And even if Trump wins, the Senate majority is only 51, and it's not filibuster proof. So it'll be hard for either party to get much done. So I think people are being kind of stasis right now before the election, but the seasonal hiring will be something that you would expect no matter what happens leading up to the election.
And much depends on what will happen through executive orders, whether tariffs can be done through executive orders, for example. But Neal, do elections matter overall? Because people, it seems, investors, businesses, they've seen so much chaos over the last couple of years or so. They could argue, hey, we'll take whatever the outcome is, we'll take it in stride.
No, absolutely. I do think that there's a couple things. One, on the tariffs, I do think Trump does pose that large risk of across the board tariffs. I suspect it won't be exactly that, but you do have that risk. Kamala Harris will be more of the same, which is where we are right now, focused on China, not much more than that. But I think the real thing that the election will impact is taxes. And so I think from that fiscal standpoint, Trump tax cuts they put in through 2017, those expire in 2026. And so if Trump's back in, I think you'll have a mandate to probably continue a lot of those. And I think if Kamala Harris wins, by contrast, you'll have taxes certainly going up, especially on the corporate side, and probably for the high earners, not necessarily for the middle class and lower earners.